Next one up here, NVIDIA to 150 soon. So let's speak about NVIDIA for a moment here. First off, up another 3.5% here today. The stock price momentum is unreal. NVIDIA, every time it has a day where it doesn't go up, you're like, it's going back up. It's just literally, every day it has one of those days where the stock goes down a couple percent or even just stays flat, you're like, it's going up. And that's exactly how I feel in regards to NVIDIA. Like if the stock goes down 1% tomorrow, I'm going to be like, the next day it's going to feel up, right? That's NVIDIA. The price momentum is unreal in the short term. And remember, the weighting of NVIDIA has gotten a lot bigger now. So basically, there's going to be a lot more forced money coming into NVIDIA because the market cap's gotten so big and the weighting's gotten so big in the Qs in the S&P 500. So if people are putting money into the S&P 500, people are putting money into the Qs. When rebalancing comes, essentially more money has to go into NVIDIA since our market cap has climbed so substantial. So that definitely helps out the stock if you're thinking about the back half of the year, okay? So the price momentum is unreal. And here's the thing with NVIDIA, right? The stock is not trading at crazy multiples still, even with this run where it seems like it goes up 3% almost every day. Here's the deal, okay? Forward P on the stock's 52. So we can call it a little over double where stocks usually trade at in the market, right? But keep in mind, the growth rates are way above double where average stocks, revenue growth is in earnings per share, right? Also keep in mind, if you look at the 52 forward P here on 1000xstocks.com and you look at the 2-year forward P at a 35, right? Keep in mind, those are taking analysts kind of together, right? And kind of averaging out what their earnings per share estimates are for the next couple of years versus where the stock price is, right? But keep in mind, what have analysts done? Analysts have been far too low for the last year and a half, or at least the last year in regards to NVIDIA numbers. So there's a good probability the earnings per share estimates could end up being too low. So there's a very good probability the forward P is actually lower in reality than where we have it here, right? And the 2-year forward P is a decent probability that's too low as well, right? So that's just a little food for thought in regards to that. Then you look at the earnings per share growth. I mean, if you compare them against their other big peers, because these three companies are battling it out right now for the biggest market cap in the world. It's between NVIDIA, Microsoft, and Apple, and they're going back and forth right now, right? And you look at these three. Well, guess who actually has the insane growth? It's NVIDIA, right? Trailing 12-month earnings per share growth, 189% versus 14% for Microsoft and versus like 6% for Apple, right? And I'm sure Apple's really gotten their earnings per share growth from those buybacks, if anything, right? Current year expected earnings per share growth, 227% expected for NVIDIA versus around 20% for Mr. Softy and around 9% for Apple. If you look at next year earnings per share growth, 40% expected for NVIDIA, 16% for Mr. Softy, and around 10% for Apple. So the growth rates for NVIDIA are just astronomically high, right? If you look at trailing 12-month revenue growth, triple digits, over the last trailing 12 months, right? Over 162% expected in the current year. And then next year, roughly 40% or so revenue growth expected. I mean, these numbers are crazy beast numbers. And that might even be the most insane thing. Check this out right here. Gross margin and net margin. Keep in mind, Mr. Softy is seen as like the pinnacle of companies when it comes to gross margins and net margins. Software company. I mean, usually those business models don't get any better than that when it comes to your margins. 70% plus gross margin and then net margin of 35% plus. And then NVIDIA just blows it away at a 78% gross margin and net margin of 57%. And remember, NVIDIA is selling actual physical items, chips, right? And all the infrastructure that goes around those chips. So it's crazy to think the margins are that insane for NVIDIA when they're really actually selling physical products as well as software, right? That's unbelievable. So when you look at NVIDIA from that perspective, I mean, just to be quite frank, the stock has more room to the upside in the short term. It has more room to the upside. There's no doubt about it. And so when I think about NVIDIA and I think about, is this run about to end? I don't think right now, right? And so I'm thinking NVIDIA could easily hit $150 to $200 in the back half of this year, right? But the thing with that is that could end up being potentially a multi-year top that the company reaches. So let's say it goes to that $150 to $200 range, especially if it pushes like 200. That could end up being a multi-year top because then essentially business cycle would still be great in 2025, but let's say there's a major slowdown in 2026 going into 2027. Well, shoot, obviously there would be a big downfall coming in that stock because of valuation. At that point, assuming it went to $150 or $200, the valuation would have gotten very, very much more stretched at that particular time. And then NVIDIA would have to deal with, potentially numbers that would be down year over year. They'd have to potentially deal with the cutting of chip prices. They would have to deal with a lot of crap, right? And so for right now, it's all blue skies ahead. But at some point, the clouds will come. Just people are trying to jump this way too fast. Remember, these chip cycles last 3 to 5 years. And I've said this since the beginning, right? They last 3 to 5 years. We're in year 2 of the chip cycle. Basically, next year is another guaranteed banger year for NVIDIA's business model, not for the stock. It's not a guaranteed banger year for the stock, but it's a guaranteed banger of a year for the business model, right? And then I think 2026 and 2027, that's where you start to really have questions about can NVIDIA keep the momentum going at that particular time, because there's a good, decent probability they're already doing 200 billion plus in revenue at that particular time, right? So a little food for thought in regards to that. Now, me personally, obviously as an NVIDIA shareholder, I'll be probably looking to get out of this one in that $4 to $5 trillion area. There's a stock or two I really like, better than NVIDIA for the long term. And so I'm thinking if NVIDIA makes another nice run here over the next few months and we stretch this baby to a $4 or $5 trillion company, which I think is very much a possibility, I would be likely looking to get out there. And I'm fine if I don't perfectly time the top. Like if the stock went up another 10, 20, 30% after I sold out, that's perfectly fine. I'm just thinking about it from the perspective of there are a few companies in this market that I like a lot better for the long term than NVIDIA, especially if NVIDIA goes to that $4 to $5 trillion area, which honestly could happen in the next few months. It's not like, for this company to gain another trillion in market cap, it could happen in 3 months. Literally. NVIDIA could gain another $1 trillion of market cap within 3 months. That's all it takes. It's not like you got to wait years and years. It could gain another $1 trillion plus within 3 months, okay? Hey, I want to thank you for watching this video here today on the Clips channel. I want to introduce you to 1000xstocks.com. This is the most valuable service you're going to find out there. If you're an investor in the market, this is a tool that's going to help you immensely get to the next level in the market. So when you're looking at 1000xstocks.com, you're able to understand all the different metrics laid out exactly how you need them as a long-term investor in the market. So let's say I wanted to look at a stock like Palantir. I can go ahead and type in Palantir right here, and it's going to say all Palantir's different metrics right here. Let's say I want to go ahead and look at a stock like Tesla. I can go ahead and type in Tesla right here, search, it's going to give me all Tesla's metrics right there. Let's say I want to look at a stock like PayPal. Go ahead, search it up, and then it's going to give me all PayPal's numbers laid out right there. Compare feature is one of the most valuable features of any service literally in the world. And the reason being is you're able to compare 3 different stocks all next to each other in a matter of seconds. It's absolutely, there's no service you're going to be able to find something like this. So let's say I wanted to find out, what do I think is a better buy? Do I think it's Meta? Do I think it's Google? Or do I think it's, let's say, a stock like Microsoft, for instance, right? So I can go ahead, type all those in there, and then hit compare, and boom, in a matter of, what was that, a second or two, it gave me all the metrics out. So now I can say, okay, Meta's forward P is trading at this, Google's forward P is trading at this, Microsoft's trading at this, and I can go ahead and understand this on a very high level. Additionally, we have earnings calls on here as well. So if I need to listen to any companies I own or am researching their conference calls, I can do it right here through the service. So let's say Tesla, if I want to pull up Tesla's latest conference call, boom, I can play it. I can adjust the speed as well. So if I want to listen to it at 2x speed, I can listen to it at 2x speed, 1.5x. I also have the transcripts of the conference calls as well right here. We're also working on a lot of different new features behind the scenes. So if you would like to apply for access of 1000xstocks.com, go to 1000xstocks.com and you'll be able to fill out an application and go from there. Let's talk about Mr. Shorthill's Capital, buying NVIDIA. Interesting.
To tell you about Weiss, we're going to toss it over to you. It's your time now, Weiss. It's your time. You just bought
Joe,
more.
could you get me lunch?
You just bought more. Well, ignore it, Joe. Ignore it. We just bought some more NVIDIA. People calling this one of the biggest momentum trades of all time. What made you buy here?
Well, I bought it here because of the momentum. I owned enough of it. I just thought that as soon as the number hit the tape, the stock is extremely liquid. It traded more than 10 million shares pre-market. So it was a good opportunity to get some exposure on a trading basis, coupled with fundamentals I think are exceptionally strong. So it's so from that standpoint, it was sort of an easy one to get into.
Easy though, because you're just highlighting the multiple expansion in the market. I mean, Nvidia's multiples actually declined, but still trading at just about 47 times forward PE. So that's easy for you to buy into.
Yeah, for the trading part of it, it's absolutely easy to buy into because the catalysts were there. The catalyst being that the market was going to go higher today. So immediately on the number, right, the futures and the pre-market traded up. I think I bought Nvidia only up $1 a share. So I'm not getting rid of my other position, which is not one of my largest positions, because I've never been comfortable with the valuation, even though it's not excessive when you look at the growth. But I just thought it was an opportunity to get advantage of. The Qs had already moved nicely. Everything else had moved nicely except for ASL and this. And then they too moved. So
Joe, I see you over here shaking your head, but worried at all about concentration risk? Actually, Apollo's Torsten Slok out with a note today talking about extreme concentration and returns in the S&P. Basically, I'm going to boil it down. Everybody can read it home, but basically just saying if Nvidia starts to decline, then S&P is just going to be hit hard.
Frank, I run an equal weighted strategy. The distance between the equal weighted performance and the performance of the S&P 500 has not been this wide in nearly 30 years. So, look, I'm okay with that. I understand it. I've been doing this a long time. It's part of the cyclical nature of the business itself, but you have to respect right now the performance of NVIDIA, of Apple, of these mega cap companies. They're leading the charge higher within the marketplace.
This is why I hate these titles of like dumb money, smart money, these sorts of things, because, Mr. Steve Weiss, he was incredibly bearish for the longest time while the market just went up and why stocks like NVIDIA went up and up and up, right? And now, after this incredible bull market we've really had since, Q4 2022, now, you hear the stuff like he's jumping on NVIDIA, he's buying NVIDIA, and it's just like who's smart money in the end, right? That's just insane to me. And so that's why I hate these type of titles of like dumb money, smart money.
I'll understand the fundamental reasons why, but I'll tell you what, Steve's buying today. The reason that you're seeing the advance today in NVIDIA and Apple is because the market is dominated by algorithms. And on a day like today, the algorithms are pivoting in the direction of these companies which have shown the very strong performance. Apple, by the way, is now back to being the largest market cap. I think it's at 3.34 trillion. NVIDIA has to step it up. It's fallen into third place. Again, it goes back to what I said at the beginning of the show. Trends are a very powerful variable within the market.
Elf on a shelf over 200.
You don't want to fight the trend. I've often said if you're looking to be a seller in the marketplace, you want to do it when the market rolls over. It gives you the evidence that it's beginning to do so. There's no clear evidence to that. NVIDIA and Apple are representation.
Wait, I want to come over to Anastasia.
Let me just give you
one second. Over to Anastasia.
Okay. I will say, we were kind of watching that previous video, right? I will say it feels more toward the latter innings of a bull market, right? Of a bull run, when I do see people that had been really, really bearish flipping over to that bullish side, right? And they're more worried about how they're going to make money from the upside of stocks, right? That kind of feels like a little later innings in the bull run overall. I will say that.
You your ears perked up. I saw you kind of look up when we were talking about concentration risk.
Yeah, I wanted to chime in on that because, obviously the market is very much contingent upon what NVIDIA does, what big tech does, but not only so at this moment. And by the way, going to last NVIDIA earnings, my thought was, it would be nice if they deliver, but if they don't, we're still going to be okay. And the reason I say that is there's just a lot of broadening that is happening around the world right now within the equity markets in the U.S. and elsewhere. And so, for example, one broadening that I'm watching, it's not just the U.S. consumer-driven economy, but also the manufacturing side of it that's picking up. It's happening in the United States, it's happening in Europe, in China, Korea, Taiwan, and more. So I like that cyclical momentum. I also like, for example, that it's not just the U.S. economy, but it's the European economy that's also doing better. We're out of the technical recession. We have the ECB rate cuts. So that's another cyclical momentum. And then to kind of circle back all the way to NVIDIA, it's not just NVIDIA that is participating in the semiconductor upside cycle, for example. It's other players in the data center space, but it's also some of the, PC semiconductors and some of the memory and some of the storage. So I think that one stock is important, but there's a lot of other things that can support the market at this point.
Okay, so in regards to valuation with NVIDIA, right? So here's what we're kind of looking at roughly, all right? If we want to compare Apple versus Meta versus NVIDIA. So NVIDIA, looking at, obviously NVIDIA clearly has by far and away the highest trailing 12-month PE of these companies, right? 71. But let's be honest, the growth rates NVIDIA has been posting up, I mean, is astronomically high compared to these other companies, right? Look at the trailing 12-month earnings per share growth, nearly 200% on this baby, right? Trailing 12-month revenue growth, 108%. Now, also NVIDIA has a much higher forward P. We can call the forward P about double, if not a little over double, what Meta's is, right? But do keep in mind, look at the growth rates expected for this year on the earnings per share side and the revenue side compared to Meta, right? So you can say NVIDIA kind of deserves to trade at a premium, right? Now you look at something like an Apple. Apple also trading cheaper than NVIDIA, but the pushback against Apple is obviously the growth rates are pretty darn lame. I mean, they're not even in the same stratosphere as NVIDIA, right? I mean, Apple's basically trying to cling on to any sort of revenue growth or earnings per share growth right now, right? If I recall, in the latest quarter, weren't their revenues actually down versus NVIDIA? So, which has triple-digit growth. So that's some things to keep in mind, and that's why I think it's hard to make an argument that NVIDIA is some crazy overvalued stock. If this stock was trading at a forward P of 100 or 150, I think it'd be an easier argument to make. But when you're trading roughly double or even less than double a forward P than Apple, and Apple's got basically no growth in their business model right now while you're growing triple digits, I mean, it's hard to make an argument that you're overvalued, right? And that's why I think NVIDIA, at least in the short term, could become easily the biggest market cap in the stock market, and by quite a large margin, at least in the short term, right? I think there are going to be question marks about NVIDIA after this year in terms of when growth rates slow down substantially, right? And potentially coming in the back half of 25. And so I think you'll have to deal with a lot of that then. But for the short term, NVIDIA is obviously very, very attractive here. So just a little food for thought in regards to that. By the way, pinned comment today, I'll put 1000xstocks.com. If you're looking to apply for access there to be able to do what I did here, compare 3 different stocks versus each other on all these different metrics, try to figure out if the stock's a great deal or a bad deal, right? You also have the earnings call tab as well. We go into metrics as well to kind of teach you exactly what all these different things are that you're looking at here, why they matter, those sorts of things. So that is definitely a very helpful service. That'll be pinned comment down there if you want to fill out an application and get access to 1000xstocks.com. So important in regards to that. Cheesecake Factory is over 40. Is 50 coming soon in regards to this one, okay? So, yeah, the stock started rolling. We're already up 23% on this one, not accounting for dividends, and that's in a pretty quick amount of time. Stock up another 3% here today. I'm not happy about it. That's why I got the sad face here, because Cheesecake's a stock I'm just looking to add more and more shares of. I really don't want the stock to be rolling already, but it is. And I'll be quite honest with you guys. If this Russell really gets moving, oh my gosh, like cake's going to be $50, $60, like quick. If that Russell really gets moving, right? I mean, it wasn't even like that great of a day for the Russell. What was it, about 1.5%? And on that 1.5%, cake's up 3%, right? So if you're talking about the Russell Wilson goes up, let's call it 10%, 15% over the next, let's assume it's in the back half of the year. Let's say the Russell Wilson goes up 15% in the last 6 months of the year. I mean, Cheesecake's probably up 30, 40, 50% in that sort of environment, right? So a little food for thought in regards to that. Now, in regards to the business model of the cake, it's obviously getting a lot better. If you look at kind of on a 2-year stack here, revenue $793 million in this same quarter they just reported here recently, a couple of years ago, versus $891 in this most recent quarter. Gross profit went from $309 million to $367 for the company. If you look at operating income, went from $29 million to $42.5 million. And if you look at net income, went from $23 to $33 million, right? So the company's business model, the fundamentals are getting better and better, despite the inflation excuses and everything everybody else is using out there, right? Because everybody's using these excuses. Oh, it's inflation. Oh, it's hard. The consumer, right? Cheesecake's like, we run a restaurant business, and the cost of doing business for us has gone up substantially, but at the end of the day, we're still putting up great numbers, and so I appreciate that. But it's not just that in regards to cake and why this one has a lot of room for the upside here. Here's the deal, okay? Forward P on the stock's in the 12-ish range. 2-year forward P is in the 11-ish range. This stock, given what I believe is the growth rates for this company, given that they got 2 banger concepts with ridiculous expansion opportunity over the next 10 to 15 years in North Italia and Flower Child, those are like guaranteed just banger concepts that they're going to be able to have hundreds of locations around the United States very soon here, right? I think this stock should trade at more of a P ratio in the 20 range, which would be roughly in line with the market. If it trades at around a forward P of 20, that's roughly in line with the market. That's where the stock should be trading at, not these sorts of joke prices. So just on valuation, we can call it upside here. And the stock has so much room. It's like for this stock to all of a sudden be $50, $60, even $70 is not crazy at all, just on valuation. Now, on top of that, the earnings per share growth here is expected to be very, very nice. Under 20%, but it's still a very nice double-digit number here. Next year is expected 8+%. I have no doubts in my mind about those numbers, just to be quite honest. Those could end up being low. As far as revenue growth goes, outside of a major recession, that could screw everybody up, right? Current year expected revenue growth, 4% for this year. I think that's probably going to end up being too low. And then 6% for next year, because remember, unit growth for North Italia and Flower Child is going to really pick up over this next couple years. So when I look at them, and obviously here I'm comparing them against Starbucks, comparing them versus CMG, do I see Cheesecake ever get into multiples that Chipotle trades at? No. I don't see this company getting to a forward P of 58 and a 2-year forward P of 45, and that's fine. I don't need it to go to that. If this stock goes to a forward P of 20, it's a win. It's a huge, monumental win, right? The upside for the stock is incredible. So that's where I look at something like this and I think about where's the real upside versus not so much upside, right? Chipotle is starting to get saturated. They're opening a lot of locations and that I'm looking at or that are more and more questionable that I think is going to come back to bite them. And then if I think about North Italia and Flower Child, their expansion opportunities next decade is just ridiculous. They won't even come close to reaching saturation in the 2020 through 2030 timeframe, right? The Cheesecake Factory brand has reached saturation, in my opinion. You can't open that many more locations of that brand, but North Italia and Flower Child, oh my gosh, we flipped my flapjack. So a lot of upside over the coming years for the cake. And don't be surprised if a lot of that upside comes sooner rather than later, especially if the Russell gets rolling.